Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott. It is a pleasure to have each and every one of you here today to join us for today's conversation around equity as the new currency. Are we talking about tokens? Are we talking about equity within a company and private investments? We're going to be talking about all of them today and how they converge as well. And I'm joined by some outstanding co-hosts of the VCTV family to talk just about this subject as well. But before we get started, big thank you to each and every one of you, not only for tuning in, but also for being a part of today's show. Comments box is live. Feel free to say hi. Tell us where you're tuning in from as well, and any questions you may have. Also, in addition, a big thank you to the LaToken team, to Maria and Hasmick for making today's episode possible. With that, let's go ahead and jump in and introduce each of our guests. Welcome, everybody. Vandana, I'm going to have you kick it off with a short introduction and background for everyone.
Yeah, thank you very much for having me on the show. First of all, I want to thank the entire team of LaToken TV and yourself, Kyle, for having this show. It's a wonderful show. It connects people globally, and it takes a lot of efforts to conduct these kind of shows. And I'm happy to be a speaker on this show. I had my own family office in Singapore and Jakarta, and I worked as an investment banker and advisor to family offices, angel investors in Jakarta, Indonesia, helping startups from a diverse background from fintech, B2B tech, all the way to consumer startups. I was raising funds for them, providing them with a range of services, just as Convanto does today. And after 15 years of staying in Singapore and Jakarta, I came back to India. I did some investments for a bit, then I returned to advisory. That is when Convanto was founded. And today, Convanto is one of the most well-known boutique investment banks in India and led by a female founder. Today, I'm also a venture advisor with Loyal VC, the INSEAD-led Canadian VC fund, having a core portfolio of over 160 investments in more than 35 countries. I'm also a partner with GSD Venture Studios, a Silicon Valley-based venture builder. Over the years, I've arranged funding for startups and growth stage companies in diverse sectors like edutech, fintech, consumer, B2C and B2B, agri-tech, health tech, food tech, disruptive tech, as well as non-tech sectors. I would recommend all of you to please have a look at my website for the wonderful testimonials written by my clients. This month, I'm nominated as the top 10 women leaders in Wealth Management 2021. And my expert opinion is sought by leading business news channels and publications like VCTV, Business World, and I've participated in 155 plus talks. You can easily see them on YouTube and VCTV streaming sites. I'm connected with 300 plus investors globally. I pick up global deals, and we are sector agnostic, and we do $1 million to $25 million. And once again, a big thank you for having me here.
Thank you as well, Vandana. Always a pleasure. And David, welcome back as well. A little intro, a little background for everyone.
Oh, always a pleasure, Kyle. So my name is David Tawil. I am the president of ProChain Capital. ProChain is a hedge fund that focuses on crypto assets, blockchain, and the entire ecosystem of payments, and we invest in tokens, we invest in equities, both long and short, that are focused on the blockchain and crypto space. In addition, we have a few private investments as well, all part of our flagship fund, ProChain Capital.
Outstanding. Well, as you are both experts in the areas of equities, whether that's private investments, it's public investments, also as we discussed in the beginning, this new emerging area of tokenization as well. I'd like to kind of kick us off and maybe have one more guest, as we do have a special surprise, ladies and gentlemen, the Grandmaster. Here he is.
I just got done bike riding 20 miles, so I'm back.
No worries. You look fresh.
I was a lot slower than what I thought I would be.
No worries. You look fresh and ready to go.
Oh,
Gary Fowler, Grandmaster of Artificial Intelligence. A little introduction and background for everyone that's tuning in today.
Yep, my name is Gary Fowler. I'm a serial entrepreneur and investor. Love artificial intelligence and quantum computing because AI is, in fact, the new electricity. I've done 17 companies. I've been involved in 2 unicorns. I was on the original management team of Click Software, which is sold to Salesforce for $1.35 billion, and also Eva.ai, an AI HR tech company. I'm the CEO, president, co-founder of GSD Get Shit Done Venture Studios, a premier AI and quantum venture studios. Our idea is that intellectual capacity is evenly spread around the world and opportunities aren't. And our job, our desire, our goal is to really bring opportunities to the world and use Silicon Valley as a port. Thank you, Kyle.
Thank you, Gary. With that being said, David, kick us off. Talk to us a little bit about equity, and is this a new form of currency? And we want to use this in 2 contexts. One, from the tokenization side. We spoke a little bit about yesterday around the regulation conversation that's happening and how some companies are creating tokens or token-based economies for themselves, giving out tokens with the ability to have governance control over an application or a protocol, and in the company itself, as we saw Shapeshift recently decide to do that with all of its users and move to a decentralized autonomous organization or a DAO. But we also have companies as a startup. Equity is a part of that play. And again, as a public investor, you may be investing in a company and receiving equity. What are your thoughts around, is this a new form of currency and what could it mean as we talk about bringing that world of decentralization in? David, all great points. There you go.
Can you hear me?
Loud and clear.
Okay. So I think that the decentralization of all this is one novel aspect. And I think the other novel aspect is that equity is not only being owned by investors, so to say, but also what I would say is sweat equity people, participants, okay? And I think it's great. And I think eventually all equities will be represented by a token, and there should be decentralization. That said, our Securities Commission is not going to allow this to go rampant. And let's just take one very easy example. So let's say you have a gaming company that goes ahead and rewards tokens to players, but also you can buy and sell those tokens as a non-player as well on some open, decentralized marketplace. And the problem that the SEC is going to have is, at the end of the day, this is equity in a company. There's nothing that will, until the SEC goes ahead and gets involved and there's registration and reporting and so on, there's nothing the SEC can do from a perspective of stopping what we well know as insider trading, right? Let's say I happen to have a great relationship with the folks that run the company. I know how many users there were last month, and I know how much the user base has grown. And so therefore, based on that, the price of the tokens should go ahead and, increase until such time as the company releases that number to the public. I can go ahead and trade on the basis of that. So I think that the SEC, and this goes back to a conversation that we had yesterday, I think the SEC wants to go ahead and wrap its arms around this. It needs to go ahead and allow it to exist because, like I said, I think this is the right way to go. I think, decentralization and disintermediating a bunch of, kind of marketplace participants that exist now is important. But that said, we're going to need to have a lot more regulation that looks a lot like current securities regulation wrapped around the crypto industry.
It's a very, very good point. And Gary, I want to come to you next. I mean, you're working, similar question, but you're working with companies on all sides, whether that is on the private side, again, startup with GSDV, or even on tokenization with some of the companies that you have a part of GSDV. So if you can, what are your thoughts on how this, equities would be looked at as a new currency?
Well, I mean, the situation is, I've been dealing with startups for a long time, Kyle, and equity is really the key. The reason that you want to get involved with the companies to be able to have a big opportunity, because part of it is, as people grow, the company grows, and you are contributed to the success, you ought to have part ownership in that company. And so David's right that at some point in time with tokenization, there could be some issues because SEC could look at it that you have equity in the company. But I mean, the reason that you get involved in a company is not for making a paycheck for the most part. If you want to be an entrepreneur, the reason is to be able to grow the value of your equity. That's really where the opportunity is. So, you know, when I look at it today, the people that I work with that have been some of the most successful entrepreneurs look at what the equity plays are. They don't look at about today in terms of whether or not they're going to have a salary every week or every month. They look at what the potential value of that equity is going to be. That's really where, you know, and a GSD, I mean, that's from our standpoint, it's about working with those companies. We take active roles in those companies, but on one side of it, it's the main side of it is, you know, how much is a company going to be worth at some point in time, and how can we guide that company to a certain level to be able to achieve that value or that goal? That's where it becomes really interesting. So, and again, it's, you know, 100% of nothing is nothing. So what can you build? What can you partake? And I know, Kyle, you've done it many times too. What kind of upside potential do you have in the company as a participant, as a co-founder, as a shareholder, as a employee?
You're absolutely right. Vandana, same question to you as well.
So, you know, 2021 has been an extremely interesting year in terms of investments. Now, sustainable investing is in the mainstream now, has been the key driver behind the growth in assets under management this year. Technology stocks have done extremely well since most companies adapted to work from home. Now, interesting new unicorns are being observed in the meal kit planning and automobile space because demand surged for them in the pandemic. Having exposure to a diversified pool of high-tech early-stage businesses would complement some long-term investment portfolios. Cryptocurrency investments have boosted and have given huge returns over the past year. Even healthcare is now a great investment opportunity, and healthcare has not been, you know, considered interesting from a growth investment point of view for a long time because it is focused on aging. But, you know, the virus has highlighted that we need more innovation. Not only did a vaccine have to be found, but people stayed away from hospitals due to the virus. And that raised the need for virtual care technologies and more telehealth and remote medicine platforms. Now, you know, the investment landscape has changed drastically in the past few years. More money has been flowing into funds focused on environmental, social, and corporate governance. In the 12 months to June 22, flows into ethical and ESG funds doubled over the year. And the pandemic has seemed to have reinforced interest in more diversified portfolio with this type of investing. And ethical stocks and impact investments have done extremely well in the past year, and it seems like they will continue to you know, do so. Now, talking about equity investments versus token, both these markets have experienced extreme you know, volatility in the past year. With crypto has proven that it can be incredibly volatile, the stock market has experienced its fair share of turbulence as well. And, you know, just last year, you know, there has been 1/3 of, you know, early stages investments that has happened, you know, in this sector. So I feel that this is what there is a change in everything.
So with that, in terms of advice, if someone's looking to, you know, start work with a company for the first time, and equity is a part of that conversation, you know, what advice may you have for them, Vandana? You know, making so many investments that you have, seeing those cap tables and those employee option plans, you know, what does that look like in terms of advice for those looking to get started in their first or their second company, now that things have kind of transformed here, and, you know, we are seeing new changes with remote working and others. What does that look like for you in terms of advice to new founders?
So the thing is that I always tell all the founders to have a pitch deck in order made by a professional. Why? Because investors don't have more than 90 seconds to spend on a deck. We need to have a video pitch deck in order. Not only this, we need to have a complementary team that complements each other, a marketing team, a technology team, an operations team, a financial team, and the founder must have a drive to run his or her show. Not only this, having the right kind of advisors, CFO, and investment bankers on their system helps them to get the right kind of investments, because they get guided all throughout. Even after they get their investments, they need guidance as to how to manage their money. And these people are really strong in helping them manage the money, because some founders have this tendency to burn the money. So, work from home is of course there, but sitting at home, having these kind of virtual webinars and platforms, one can have 10 to 15 meetings in a day and close deals very fast. So I think everybody should make sure that their LinkedIn is in order. Not only that, having their website in order, because the investors do check that, going digital all throughout as much as possible, and creating a digitized platform and going global is the message that I want to spread across.
Going global is a great message. And Gary, with that, I mean, you work with so many global companies. GSDV is global. How does the equity conversation change, or does it, for some of those early stage startups, as new founders and team members are coming on as they're getting started, whether they be in other locations around the world?
I mean, some countries don't believe in giving up equity, Kyle.
Mm-hmm.
They just don't have it in their DNA. And so you have to talk about why they need to do it, when they need to do it, and how they need to do it. So those discussions come up more and more. And what I tell them is basically, or we tell them, is that if you want to really be looked at as a global corporation, you got to give something up. And it goes back to what I said earlier, 100% of zero is still zero. If you want people to partake and help you grow your company, you got to give them something for it, especially if they're in the Western world. I mean, it's just, they're used to it. So what we want to do is, when you build a company, it's like building a house. You want to make sure your foundation's really solid and that you're prepared to go global, because those issues are going to, VCs will come up. They'll ask you what your cap table looks like, how many shares are allocated for employees, and not only how many, but how they're allocated and when you intend on using them. So it's critically important. But these are discussions that need to be had with startups. But the good news is, I can see it changing, day by day. People understand, CEOs, founders understand that they need to share if they want to have success. Although sometimes, Kyle, it's real tough to get them to give the correct amount. I usually say anywhere between 15 and 20% of your company for employee stock options.
Thank you very much, Gary. It's great advice. David, thoughts, anything else to add, or anything from the companies that you're working with, especially because, again, we had that long debate yesterday, a good conversation, I might add, around tokenization in this world that's upcoming. Anything else to add in terms of advice or what's happening?
I think people should certainly not ignore the fact that, tokenization is a nice form in terms of, transferability, malleability, security of ownership interests. But at the end of the day, if you're getting these tokens, whether you're buying them or whether you're being granted them, and they're equity interests in a company, especially here in the United States, you should be very wary of the fact that eventually the SEC is going to come looking for you. Not in a terrible way. They're probably going to thump the company, first and really hard. And then, those tokens are going to need to be registered, and they're going to be subject, to all the things that happen with listed equities. I mean, this is not the first time, that folks have tried to do this, right? I mean, to go back to some of the comments made by Vandana and by Gary, you can be an initial investor in a company, with equity being owned privately, i.e. it's not going to be traded. It's not being offered for purchase by anybody. It's simply an investment deal, i.e. you give me some money in exchange for a piece of the equity. The expectation is that you will not trade that. Once you start to trade that, right, and it usually comes with a no trading or no transferability clause in your equity, once you start to offer that out, then it becomes you're skirting the rules and the SEC will come hunting for you. And so there have been, attempts successful that have been able to go ahead and trade those private interests without registration. There was a company called Second Market, and I think, it was founded by a guy who's now, big crypto guy, I forget his name, that essentially, back in the day transferred WeWork shares, Uber shares, between initial investors and people that wanted to get in pre-IPO. And you had to sign all sorts of disclosure and waiver conditions in order to go ahead and trade that equity. But once it starts to go to a wide universe of people and you think you're going to be, early because you have access to it because you're buying it off the crypto exchanges, just think twice, because the SEC is not going to look fondly on the fact that you're buying it off of some crypto exchange, and other, investors could easily be getting hoodwinked. You could be manipulating the price. You could know more than the other investors know. So I don't think that game is going to last very long. And again, it's not, illegal by any stretch at this point. But I think the SEC is obviously, for good reason, frankly, it's within their purview to go ahead and protect investors. I think they're eventually going to go ahead and, kind of clamp down on that stuff.
That's a very good point. And Vandana, I want to come to you for closing thoughts. Anything else you want to add and throw out there? And then where can everyone find you to continue the conversation around today's topics and other topics? As you're an outstanding investor investing in many different areas, companies should be looking to reach out to you.
Thank you, Kyle. So I just have to say investors should keep in mind that they need to have a diversified portfolio. Equity investments along with token crypto investments as well as ESG and ethical investing should be a part of one's portfolio. And I could be reached out to on LinkedIn and my website www.convanto.com. And once again, thank you for having me here.
Thank you very much as well, Vandana. Gary, to you, closing thoughts, anything else to add on today's topic? And then where can you be found online as well?
So we always say that, that it's about opportunity, and equity does give you an opportunity to change your lives, an opportunity to move forward, an opportunity to accomplish incredible things. So I'm a full believer in equity in all kinds of different ways. We just have to be careful how we use it. You can reach me, Gary Fowler, on LinkedIn. You can reach me on Twitter. Check out my shows. Love to talk. And of course, you can reach me through VCTV. Thanks, Kyle.
Thank you very much, Gary. And also, everyone, make sure to check out Gary's new radio show as well on iHeartRadio. Shameless plug if you haven't done so already. And David, close us out. Any closing thoughts? Where can you and ProChain Capital be found online for continued conversation?
Sure. Closing thoughts. Everyone's got to keep their eye on the regulatory ball, not only here in the United States, but all around. I think it's really important to go ahead and, get regulations in place to allow the investor universe, in this revolutionary asset class to go ahead and take it to the next level. So I think it is a good thing, a necessary thing. And I think, more than anything, we'd like to go ahead, we as the industry would like to be collaborative with legislators so that they're educated and make good decisions in establishing regulatory parameters. In terms of finding me, you can find me on LinkedIn, David Tawil, and then on Twitter at David D. Tawil. Thank you.
Wonderful. David, Vandana, Gary, thank you so very much for today's conversation and your insights around equity as or potentially a new currency in all shapes and sizes and forms as well. And to your audience, thank you so much for tuning in. If you like what you heard, make sure you click like, share, and subscribe on today's episode. Also, if you haven't done so already, please do check out the archive on LaToken.com to hear from today's speakers and all speakers of the VCTV family. With that, everyone, have a wonderful day, and a big thank you to the LaToken team and to Maria and Hasmick for making today's episode possible. Take care, everybody.
Bye-bye.
Bye. Thank you.
Bye.
Good